Apple stock hit an all-time high, well, a new all-time high, while Hertz continued to hang along. Ladies and gentlemen, stay tuned as we talk about why Apple hit an all-time high in their future, and Hertz as well. But first, hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, today, Apple has hit an all-time high of $355, but it closed down a little bit at $351. What does this mean? Ladies and gentlemen, Apple has 73% of their stores still closed. They have 271 stores, right? And 200 of them, they have 271 stores, and 200 of them are closed. They're slowly talking about opening them back up, but as they're starting to open them back up, you're seeing the company and the stock is starting to run up on the anticipation of these stores to start to come back. Ladies and gentlemen, you're talking about Apple. Apple is the number one when it comes down to market capitalization in the technology sector. The technology sector is the sector that has the most growth. It's something I told you, ladies and gentlemen, all throughout this time that we had the pandemic. Prince, what should I invest in? What should I buy? I said, well, the simplest one is going to be Apple. You're going to look at Microsoft. You're going to have Amazon. Those are the big boys, the MAGA. Remember, I kept saying the MAGA, Microsoft, Apple, Google, Amazon, right? The MAGA. Now you're seeing the MAGAs run to the moon. Not so much crazy with Google, but Microsoft is doing very well. Apple is doing very well. And we still haven't swung into a big recovery. Now, with this being said, I'm looking at it saying, wow, only 26% of the stores are open and they're still doing very well. That's because they have a high revenue, they have a high pile of cash, and a relatively manageable debt, manageable debt, right? They're right there with Microsoft when it comes down to their debt to equity ratio. But that one, I wanted to show you guys and girls that that's a new company that's doing very well for investors, people who have Apple stocks or whatnot. Now, 355 is not the highest the stock has ever been of all times. For the people who's been following Apple for a while, you'll notice that Apple did a stock split back in 2014. They were actually $700 a share, and they did a 7-for-1 stock split. They brought the stock down to $100 back in 2014. Now we fast forward 6 years later, the stock has grown 300%, over $300. Guess what, ladies and gentlemen? When people say, can Apple go to $400, $500, $600? I said, of course it can. It was already there. Apple was already at $700. And they wasn't even making the type of revenue they make today. So yes, will it be a fast ride? No. Will it be a slow ride and a bumpy ride? Probably so. But will it go back up to 400, 500? Yes, right? I wish I would have kept my call that I had on Apple. I told everybody June, I think it was like June of next year. I think it was June 2021, Apple call, and at 300, and definitely that's very, very profitable option trade right there. But it was simple. I figured we'll be out of this mess by next summer, and I knew Apple, leading the technology sector, would go off and do great things and crush over 300. So that was pretty much going back to where it was before the pandemic even broke out. But anyway, ladies and gentlemen, now let's get over to Hertz, our struggle bus stock. So yes, we know Hertz is our struggle bus stock and is having some hard times right now due to the pandemic breaking out, and the demand for rental cars are drying up due to people's lack of travel. Hertz is trying everything. It's pulling out all stops. It's selling cars. It's selling stock. It's selling bonds. It's filing for bankruptcy. Well, Chapter 11 reorganization. It's doing everything that a company that is having a hard time would do. They have $1 billion on cash, but they're utilizing that $1 billion on cash to keep their operations open. They cut half of their employees. They laid off half of their employees. Also, they own Dollar and Thrifty as well. They laid off half of their employees. They consolidated a lot of their locations that are not near airports. They consolidated their locations. They cut their employees, furloughing people. They're selling cars. They're doing everything. In their latest round of what they're trying to do, you can read right here This came out on June 15th, and then they updated it on Monday. Then they updated it today, where we can take a quick look at it. And what they're going to be talking about here is they're trying to sell $500 million worth of shares. See, they're selling $500 million worth of shares to this company called Jeffries LLC. They're looking to do that for 1 penny per share. They're looking to sell their stock for 1 penny per share to Jeffries LLC in an effort to raise $500 million for the company. This is pending. This is pending approval by the SEC right now. I know they was kind of going through court. They was requesting to see the SEC because the SEC is talking about delisting them. Because they're in such a hard time right now. They have a large amount of debt, a low amount of cash. They're trying to reorganize their debt. They're laying people off. They're pulling out all stops before they go down. But their latest thing here is to sell their stock for a penny in order to raise $500 million and give Jeffries LLC a chance to be able to buy the stock back for a profit in the future if it makes it through. They also down here on Monday, they pretty much said they're pretty much sending in investors a big notice that you can see down here in the latest SEC filings. Where is it at? I probably can't find it here exactly on here if it's this report, but they pretty much sent out a warning to investors saying that, hey, we could turn into a worthless stock. We're experiencing hard times, and we want to give you a heads up that things are not looking pretty for us right now, and you could lose all of your money, is what they're letting you know. So, ladies and gentlemen, this is stock. Hertz has been on the struggle bus. This is a struggling stock. I like Apple. I like companies like Apple and Amazon and Facebook, companies who are thriving during this time period, not the companies who don't know how they're going to make their way out of this. This is why it's very important, ladies and gentlemen. When you look at companies like Enterprise, who's privately held, but Avius is another public company, this is why I like the companies paying attention to the total assets. Because when the total assets is very important, when a company's total assets and their current liabilities and their current assets, it's very important when you watch this stuff, right? And why is this very important? This is very important because when hard times hit, that's how you're going to tell who's going to be able to last. So take this as a note, ladies and gentlemen. Watch Apple in these hard times and watch Hertz in these hard times. And ask yourself, what's the difference between them? It comes down to the finances. This is why it's very important. You crack open those 10Ks, those 10Qs. Know how much company the cash has. Know how much cash the company has. Know who's backing the company. Know who's invested into the company. Because when the hard times hit, that debt becomes your enemy and that cash becomes your friend. And if that cash is just getting burned through left and right, oh man, it's only 3 things a company is going to do during a hard time. Either they're going to survive, thrive, or die. Survive, thrive, or die. Right now, Hertz is surviving on the verge of dying versus companies like Apple, Facebook, Amazon, Zoom. These companies are thriving in this market. But anyway, ladies and gentlemen, boys and girls, and children of all ages, my name is Prince Dykes. This is the Investor Show. And until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe, peace, be safe, I'm out. Happy investing.